Well, some breaking news for you. Meta Platforms says it will invest $600 billion in American infrastructure and jobs over the next 3 years, including AI data centers. Now, this news comes as alternative asset manager Blue Owl recently announced a joint venture with Meta to build out a $27 billion data center in Louisiana. Now, Blue Owl Capital co-founder and president Mark Lipschultz is here to discuss so many questions. But first, let's talk about Hyperion. But then in the bigger story, within the space right now, we're seeing these stocks under pressure from a market perspective because there's concern about these frothy valuations. You're actually going into this deal with Meta. How in the heck do you structure something like this? It's fascinating.
So we're in a really fascinating time, of course, for AI. And I break it down into two components and ultimately get into the question of structure. There's the kind of overall direction of travel, or put another way, is AI a transformative force on the economy, the world, over the next 10 years? And I'd have to say that seems quite clear. It's going to be a transformative impact. Then the question becomes, of course, valuations. Okay, well, what's it worth and to whom? So, who will make the money and when will they make that money and how much? And so
that's the structure question.
Therein lies exactly. Yeah. So that takes us to structure. So for Blue Owl and in our partnership with Meta, we're in a very particular part of this AI transformation. We're in the infrastructure layer. So the thing we do at Blue Owl is we provide the large amounts of sophisticated and properly structured capital to actually build the core infrastructure, these data centers. As you said, the Meta project's a $27 billion project in Louisiana. The way that works for Blue Owl and our investors is we sign a 15, 20-year, in that case, it's expected to be a 20-plus year combination, where we get payments from Meta to be the lessor of those properties. So for us and our investors, it's a very, very predictable and attractive income stream to provide the infrastructure layer. Then, of course, Meta will have this data center capacity, and they're as skilled as any company on earth at how to harness the power of technology and commercialize that. But that's something they'll be doing, and they'll have the benefits that go with that. And maybe as the question is answered, how much do you make and when? Well, that's for Meta. We're going to make a very predictable and attractive amount for the next 20 years.
Well, and I see why you're in this space. If you look at the reports we've gotten from Alphabet, from Meta, Microsoft, Amazon, they've all lifted their guidance for CapEx. I mean, that's $380 billion combined in those companies I just mentioned, which is fascinating. You mentioned Texas, New Mexico in a year. You mentioned Texas, New Mexico, Louisiana. There's also a power story here that because you're in a deal like this, I mean, we're hearing more and more that you can build it, but can you power it? Is that something that you've heard concern about as well?
Yeah, look, power constraints are probably the ultimate constraint on the development of this AI capacity. Yeah. At the end of the day, you've heard experts make, I think, this comment, which is really the electricity production and ultimately the cost of electricity production is kind of the determinant of AI output. In a way, it's like taking electricity and turning it into synthetic brain power. That is the transformation process. Now, it's very expensive to build those synthetic brains, these data centers. But once built, power is the input so that you can get the AI output. And those are constraints. Now, that's part of the design and part of what we, or depending who we're working with, bring to this, in addition to capital, is skills and expertise. We have a 1,000-person operating group that does design, build, operate of data centers. Sometimes that's the approach, like in New Mexico. In the case of Abilene, Texas, that is with a partner, Crusoe, fantastic company that's an expert in this kind of same question development. Or Meta, in the case of Hyperion, they're going to do their own development and design. So there's a lot of ways to come at it. But in any case, power is the critical determinant and input, because these do take a lot of power.
I want to ask you on the private credit side, JP Morgan CEO Jamie Dimon was warning about credit risk in the economy. We've seen that with the automotive company, with the bankruptcy there, with, that private credit. In a time where you've got the Trump administration talking about maybe giving those that have 401ks access to private equity and private companies. What do you make of that dichotomy, if you will? And do you think that that is safe? Because we're talking about 401ks, retail investors, average Americans.
Yeah, well, here's the good news. Yeah, here's the good news. Private credit has and continues to work. And actually, we just announced results, literally just announced results yesterday, to public vehicles that we have that provide private credit solutions, and the results are outstanding. We continue to run at extremely low default rates and extremely low loss rates. We have done over $150 billion of loans at Blue Owl over the last 10 years, and our loss rate has been 13 basis points a year, so close to 0.1%. Now, over time, of course, if the economy is worse, you'll take on additional challenges, but here's an important point. We don't have those problems. We don't see those problems. The examples that you cited actually are not in the private credit marketplace. They're actually over in the traditional marketplace, traditional syndicated or bank marketplace, which isn't to eliminate. We're all one part of one ecosystem, so it's not a pass the buck point, but it's not even actually in our market. And it appears the visible ones that have catalyzed so much conversation actually appear to be frauds, which probably makes them the least extrapolatable.
Which makes people nervous.
Well, sure, it makes them nervous, but it's not
you know?
about the credit and it's not about the systemic risk. It is about picking the right manager and making the right investments. And I feel very confident that actually starting with credit is exactly the right place for individual investors because it is the so-called top of the capital structure, right? It means you're first in line. So it's actually the safest place to stand in this world of private markets.
You may not be able to give me a number on this, but if you're talking about the need for more data centers leading to $1 trillion in new capital expenditures, $1 trillion, where does that investment come from?
Well, we're working on it.
No. Do you have it now?
So we're working on it. We have pools of capital, but that's a deep opportunity that's part of the excitement for all of us.
Yeah, it really is. Markets, it's a fascinating, again, it's what everybody is talking about, and the markets are trading on it all year. Mark Lipschultz, great to see you, sir. Thank you.
So good being with you.
All right.